Hello and welcome to another update video about the DXY. So this is now an interesting one because we are right in the resistance area. Not much happened since my last update and we want to talk about the scenarios again. So bigger picture assumes still that we will go down lower and do this A wave, B wave, C wave. So that we will come down eventually sort of into the $90 range, low $90 range. That sort of remains expectation, and it would need to get some upside or quite significant upside actually to, well, rule this scenario out. However, there are different ways of getting there, and there's two different ways to get there. Two main ways basically to get there, right? And we talked about them before, and again, they are both likely at this stage. So the first scenario is basically if we follow the yellow count, then we can say that of this, so that we can say basically we moved down in an A wave, we retraced in a B wave, topped here around $104 on the 6th of March, moved down in a 5-wave move, which was then already the first wave of the C wave. This pullback is an ABC correction, which could be complete, basically bounced off the 78.6 retracement at $104.80. The fact that we got rejected there definitely has my attention because this is quite meaningful for this particular count. And then we could head down next in a third wave, should get a fourth wave and the fifth wave in a C wave. Certainly an absolute likely scenario, but it would need to break below the last swing low for me to confirm. So it would need to break below that $103.36 level. And after that, it would need to break down lower and ideally follow through to break below the 101.60 level. And then I think we have a good confirmation that we're heading down in the yellow wave count. However, we also need to say that that B wave here was very shallow. So this leaves the option open that actually, and that is a count as well I showed you, and it is possible to count it that way, that this A wave actually never bottomed on the 1st of February, but the low was actually in on the 13th of April, which leaves the possibility to place the A wave here. Based on that, we would now be in a B wave and would follow here the white subwave count to the upside. Could have completed here an A wave instead of a wave 2. Could come down now in a B wave next and then rally in a C wave higher. This is both possible, and therefore I did tell you that, okay, the first signal that this lower or short-term uptrend is over would be a break below the last swing low at $103.40 roughly. If we then come down and break below a certain level, which is the 101.60 level pretty much, that would confirm the yellow count. But if we hold this level, this is support for the B wave, So if I'm looking at this support area, this is the standard support area for a B wave. So that means that if we pull back now, and it's a corrective pullback, and we hold the 101.60 level roughly, and do not break and sustain below it, then we have a good chance, it's actually quite likely, that price will rally in a C wave of wave B. So this is the area between the 50% and the 78.6% fib level between $101.64 and $102.75. Now, obviously, we need to pay attention to what the price is doing when it gets into this support region. Also give it another color. But this is certainly an important support level where price can turn around to rally higher in a C wave. The idea would be that if price gets into this region, it should be a 3-wave move. If we see a 5-wave move down, it would rather indicate the 3rd wave is happening. And if we see a very, very impulsive sell-off now, it's most likely the 3rd wave to the downside. So we still have a chance to push higher. Can't really give you a target for that C wave yet. We can make some assumptions. A possible target would be, for example, the 1.618 extension up there at $108. But we need to take it level by level and need to look at the subwaves, need to look where exactly it would find a low. So to keep it very simple, for me, the main pivot between a breakdown in the third wave and a higher C wave is the 101.64 level. And now we're basically caught between resistance and support, right? So it's a matter of perspective. Now you could say, okay, as long as we are above $101.64, we can focus on higher. Or you can say that as long as we stay below $104.81, we can focus on lower. So this leaves us with a range, and a breakout of the range is needed for the price or for the chart and the market to give us a clear indication. So the negotiation between the bulls and the bears needs to happen now. They need to make up their mind, and then we need to take a look, right? So for me personally, yeah, I mean, I personally like to see the sell-off, and it would possibly be also positive for crypto. But this is only my own opinion. Yeah, I mean, I recognize that in this scenario where we already are in the yellow sell-off, this B wave would be a bit too shallow to be really a likely B wave. Therefore, from a probabilities point of view, you could say that a higher B wave is more likely. But then oftentimes the market does exactly the opposite of what's likely, just to piss as many people off as possible. So we need to keep an open mind here, keep an eye on the levels. They are objective, you know, and the market doesn't care about what I want or what you want. It's all about the objective levels, the pivots. Don't trade the primary count, trade the pivots. And we trade the pivots that the count reveals, not trading the count. Okay, that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.